Imagine, you have $1,000 to invest in 2025. The year ahead promises new opportunities, but the question is, where do you start? With so many options available, stocks, bonds, real estate, and even cryptocurrency, it can be overwhelming to decide how best to grow your wealth. In today's video, we're going to break down the most effective ways for beginners in the USA to invest $1,000 in 2025. Whether you're new to investing or looking to optimize your portfolio, this guide will give you clear, actionable steps to make your $1,000 work for you. 1. Understanding risk and setting goals. Before we dive into specific investment options, let's talk about something crucial: risk tolerance. Every investment carries a certain degree of risk, but what's more important is understanding your own comfort level with risk. Are you looking for steady, long-term growth? Or are you willing to take on more risk for potentially higher returns? Take a moment to think about your financial goals. Is your aim to grow wealth over time, or do you need quick access to your funds? Your risk tolerance and goals will help determine the best investment strategy for you. 2. Low-risk options, high-yield savings accounts and bonds. For those who prefer to keep things safe, there are low-risk options that can still offer returns. High-yield savings accounts and bonds are often overlooked but can be great ways to earn steady interest on your $1,000. A high-yield savings account is essentially a savings account with a higher interest rate than traditional accounts, meaning you'll earn more on your deposit. With interest rates on the rise in 2025, this is a solid option for those looking for a secure place to park their cash while earning a modest return. Next, we have bonds, specifically U.S. Treasury bonds or municipal bonds. These investments are backed by the government, making them one of the safest options available. While the returns may not be sky-high, the predictable income and low-risk nature make bonds a reliable choice for beginners. 3. Moderate risk options, ETFs and index funds. If you're ready to take on a little more risk for potentially higher returns, consider investing in exchange-traded funds, ETFs, or index funds. ETFs are collections of stocks or bonds bundled together, offering diversification without the need to buy individual assets. For example, you could invest in an ETF that tracks the S&P 500, which includes some of the most stable companies in the USA, like Apple, Microsoft, and Amazon. Index funds work similarly but are typically purchased through mutual funds. Both ETFs and index funds allow you to spread your investment across many assets, which can help minimize the risk of putting all your money into a single stock. For $1,000, you could easily buy a low-cost S&P 500 ETF, which has historically delivered steady returns, averaging around 7 to 10% annually. These types of funds are perfect for beginners because they offer diversification and long-term growth potential, while requiring very little knowledge of the stock market. 4. Higher risk options, stocks and cryptocurrency. Now, if you're looking for potentially higher returns and are willing to take on more risk, stocks and cryptocurrency could be the route for you. Investing in individual stocks, particularly in sectors like technology, healthcare, or renewable energy, can be a way to maximize returns if you pick the right companies. However, this requires careful research and an understanding of the market. For $1,000, you could consider diversifying your investments by purchasing shares in several growth-oriented companies, rather than putting all your money into a single stock. Cryptocurrency has also become a popular option for investors looking to take advantage of emerging technologies. In 2025, Bitcoin and Ethereum remain the leading cryptocurrencies, but there are many other options to consider, such as Solana or Polkadot. However, it's important to approach crypto with caution. Its volatility can lead to high rewards, but equally high losses. If you decide to invest in crypto, remember to only invest what you can afford to lose. 5. Alternative investments, real estate and peer-to-peer lending. Another interesting way to invest $1,000 is through alternative investments like real estate and peer-to-peer lending. Real estate has traditionally been an investment reserved for the wealthy, but thanks to real estate investment trusts, REITs, you can now invest in property with just a small amount of capital. REITs allow you to buy shares in large-scale real estate projects and receive a portion of the rental income. This is a great way to gain exposure to the real estate market without needing significant funds up front. Peer-to-peer lending platforms like Lending Club and Prosper allow you to lend money to individuals or small businesses in exchange for interest. While this option carries more risk than others, it can provide higher returns. Just make sure you research thoroughly before committing to any platform. 6. Diversification, spreading your investment across assets. Regardless of your chosen investment path, one of the most important strategies is diversification, spreading your $1,000 across different assets. This helps reduce risk, ensuring that if one investment underperforms, the others can help balance out your portfolio. You might allocate 40% to ETFs, 30% to bonds, 20% to individual stocks, and 10% to a high-yield savings account. This approach allows you to tap into different sectors and investment strategies, giving you a better chance for balanced growth over time. Investing $1,000 in 2025 as a beginner is entirely possible, and you don't need to be an expert to get started. By understanding your goals, risk tolerance, and options, you can create a diversified portfolio that's right for you. Whether you choose safer options like high-yield savings accounts and bonds or explore the world of stocks and cryptocurrency, the key is to get started. Remember, it's not about trying to make a quick buck, it's about building wealth over time with a strategy that suits your needs. Thank you for watching. Like and subscribe to our YouTube channel for more interesting videos.